Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, August 31st. Well, the S&P 500 and the Dow Jones Industrial Average are sinking so far today as jitters over ongoing trade talks between the United States and other major economies are weighing on the indexes. However, gains in Apple and Amazon are presently lifting the Nasdaq. And now let's go on to three charts that could give us a little insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, currently, you can see that the SPY is continuing on in the very strong uptrend it has been in since April of this year. Again, this is a daily chart of the SPY. On this chart, the red line is the 20-day moving average, the green line is the 50-day moving average, the black line is the 200-day moving average, and these are all simple moving averages. Now, the SPY made a new all-time closing high this week on Wednesday at $291.48, which is about $29.14 on the S&P 500 itself. Now, when I captured this chart today, the SPY was trading at $289.60. Nearby price support is coming in here, right here at price support and the 20-day moving average at about $286. We have more price support here where the 50-day moving average is coming in at $281, and there's price supports coming in here at $280, which would be about $2,800 on the S&P 500 itself. Of course, we've got this nice strong uptrend coming in here, just under $279, and the 200-day moving average is coming in at $272 and change. So all in all here, we have a lot of potential support should the SPY find it necessary to pull back in the coming week. Now, what I want you all to look at here is the RSI. The 14-day RSI is overbought in the short term. It's up at the 70 line on its scale. When it does that, it means that whatever you're looking at is overbought. Now, many times that does mean that we need to take some profit taking in here to make this little retracement come in. Markets can't go up unless they come down. And when the RSI is overbought, it doesn't mean the uptrend's going to end. It does mean that potentially we could see a little move down here, a little pullback, a little retracement as the SPY is trading at quite a premium to its 20 and its 50-day moving average is just getting stretched pretty tight here. Again, it doesn't mean the uptrend's going to end, but it does mean during this process in the coming week, maybe we see a little pullback coming in here. Let's keep an eye on the SPY in the coming week and see whether it can continue in this dandy uptrend. Of course, we want it to stay above the 50-day at 281, naturally above this trend line at about 279. So let's keep an eye on it and see if, in fact, September starts out to be the very volatile month that it usually is. Our next chart here is a daily chart of the Power Shares QQQ. The QQQ is the ETF that represents the Nasdaq 100 index, which has in it the top non-financial stocks in the U.S. stock market. And of course, as I've told you before, the leaders, the high components in the QQQ are the likes of Amazon, Facebook, Microsoft, Apple, Google, Intel, Netflix, that whole group. So we see that the QQQ is also in a very dandy uptrend. We also know that on Wednesday of this week, it made a new all-time closing high at $186.74. Now, Amazon, which again is a big component of the QQQ, was a help as Amazon is currently soaring to new highs and Apple as well. When I captured this chart today, the QQQ was trading at $186 $2.35, really maintaining its height here. Be interesting to see if it can continue to do so. Now, like the SPY, the RSI, and even more so here, shows that the QQQ is overbought as the RSI is up, oh, you probably can't see it, just a tiny bit above that 70 line right here. It's also trading at a premium to the 20-day and the 50-day moving averages. So it is possible, not for sure, but possible that during the coming week we could see a little softening here of the QQQ. But like the SPY, there's tons of support here coming in at the 20-day at 182, certainly on the trend line here at about 181, and coming in at price support and 50-day moving average support at 178.80. So it'd be interesting to see here in the coming week. This is a beautiful uptrend. If tech stocks can keep on going, or we've got a doji here from yesterday, we'll have to see if it needs to soften up a little bit. We have a 4-day week next week. As you all know, the market will be closed for Labor Day week, Labor Day holiday on Monday. Okay, our final chart for today is one we haven't looked at in a long time. This is the daily chart of the Spider S&P Bank ETF, symbol KBE. It has 80 holdings, including Radian Group, MGIC, Wells Fargo, Citigroup, Huntington Bank Corp, and JP Morgan Chase. Now, the Fed is expected, of course nothing is for sure, but the Fed is expected to raise interest rates toward the end of September in its meeting right around, I believe, September 25th. Now, since banks, their product is money, and if when they sell that product, if they get a higher price for it, they should do so if the Fed raises interest rates. That automatically, more or less, gives banks a raise in the product that they are selling, again, which is money. So the KBE has been wandering back and forth here since March. As you can see, it was in an uptrend, made this high up here around 53, then pulled back, moved back up again above its 50-day moving average, made a little double top here formation, moved back up, and then fell pretty dramatically down here to support at about, just below 47. Since then, it's rallied and finally made its way back up over the 200-day moving average, which has acted as really good support here while the KBE kind of shook out some of its lethargy. It's moving in an uptrend here. Recently, it came down to back below its 20-day moving average. When I captured this chart today, it was trading at $49.17. Now, right under this price action here, if you can see it, we have the black line, which is the 200-day moving average, coming in at $48.79. We also have the green line, the 50-day moving average, coming in at $48.67. So far, this 200-day moving average and recently the 50-day has been acting as support, this zone right in here, about $48 and change, $48.49 right in here. So today it's pulled back to a positive day here, at least so far. Again, when I captured this chart, the KBE was trading at $49.17. If the market moves higher and remains positive in the coming week, and the KBE can stay above its 50-day and 200-day moving average, if it bounces up off this support line here at about 49, I may look to add shares to my portfolio. Of course, my goal is that it moves back up to this prior high here at about $50.50, then continues to move up to the next high, which comes in here right around 51 and change, and back up to 52. That would be my goal, but that may not happen. So if it stays up and looks positive, I may add shares to my portfolio. However, if for any reason the market rolls to the downside, A close below the 50-day moving average will be my initial protective stop. And the 50-day moving average, again, right now is coming in at $48.67. So a close below that, and I exit the trade. So you may want to keep an eye on the KBE in the coming week to see if it can bounce off this support level and move higher. Of course, if it doesn't, then we'll look for something else that's a little better. And now on to next week's economic reports. But first, please know that we are offering our popular online training, either online or DVD format, for a huge 35% discount right now. Now, as I said, I'm pretty much guessing, and so is everybody else, that the market's going to become more volatile in September and October. And this is the perfect time to learn how to handle that volatility successfully and learn how to maximize your trading gains. This is the complete step-by-step training that ensures you become the confident, profitable trader you've always wanted to be. So check out our training, 7 Steps to Successful Trading. It is our flagship product. It is the one that Gordon Scott, CMT, and I did together. It's a fantastic program that gives you just about everything you need, again, to be able to maximize your profits. Now, we're having currently our Labor Day sale for a limited time, just the next couple of days. You will receive 35% off 7 Steps to Successful Trading. In order to check it out, click on the link below or enter the link that you see right down here. And now on to this week's economic reports. On Monday, as you all know, the market's going to be closed for Labor Day. On Tuesday, we have the ISM index. Wednesday, we'll have auto and truck sales and our usual crude inventories. Thursday, we'll have the ADP employment change, as well as jobless claims. That's a weekly jobless claims, our ISM services, and our usual natural gas inventories. On Friday, we will get our monthly jobs numbers. And remember, trading and investing successfully does take a certain level of training and a certain skill set. You can easily and quickly learn what you need to know in 7 Steps to Successful Trading. Just click on the link below. And please check it out now because this sale ends in a couple of days. Until next time, keep green on your screen. I'm Toni Turner, and this is the Market Now.